Hello, George Briere here, making another video from my home office here in Gladstone, Michigan, located in the Upper Peninsula of Michigan. Population 5,000. We're known for the best walleye fishing in the world. Actually, about a little over a mile that way, we got the Little Beatty Knock on Lake Michigan. But yeah, I'm shooting this video because we're going to do a case study here today for Cypher Pros. And let me share my screen. So yeah, Cypher Pros. Got to show you this slide. So that's the name of the company, Cypher, and we do have a physical office location in Colorado Springs. Colorado Springs, this is Google Map. I'll put the Google Map in the description of this video in case you want to take a closer look. We have an address and a phone number. This is a real company. You know, if you're looking for a reliable trading algorithm this day and age, it's tough to find a real company. This software, we're about to do a case study, but before we get into that, I just want to point out that this software is proprietary, meaning we do have an in-house development team working on it. Our five-person development team had previously been contracted with Citibank before coming over to Cypher. They've been working with the co-founders for a little over 3 years. This is not white-labeled software like 99% of the other companies that you may or may not be finding on the internet. And if you don't know what the definition of white label, all that means is that they do not have an in-house development team. They are actually rebranding somebody else's software. And those softwares have a shelf life because they're not updating them. And if you're not updating your software as technology changes, if you're not updating your software as market conditions change, well, you're in trouble. But yeah, this software is not only proprietary, it's evergreen, meaning it's continuously updated. That's why probably one of the reasons why we have over 200 clients and 0 losing months. We haven't had a losing month yet. And I always got to throw yet in there because this is trading. And we do expect to have a losing month because it is trading. Can't always win, right? But so far, so good. Over 2 years, 0 losing months. But we're going to do a case study here. And just before I get into it, if you'd like to take a closer look at our trading algorithm, I do have a link in the description of this video. You could schedule a one-on-one with me and we could jump on Zoom and I could give you a quick rundown. But let's get back to the case study. So here's a client with us, and we're looking at this third-party data verifying software called FX Blue. FX Blue, again, is a third-party data verifying software. So there's no way to manipulate the data. There's no bias. But this account has been trading for 342 days, so almost a year. And this is a real account, not a demo. This is real money. And it was last updated 11/34. That was the last update. This is the data as of about an hour ago. And for those of you that don't know how FX Blue works, this red line right here indicates net deposits. You can see that they got started with 10,600 in the broker back on July 13th, 2025. And then they also put another, looks like they put another 20,000 in. I said that wrong. Another 10,000 for a total of 20,600 in deposits. The blue line here represents the growth. So yeah, they put a total of 20,600, currently sitting at a balance of $37,413 since July 10th, 2025, which equates to a $16,835 in closed profit. The definition of closed profit is your profit after the broker takes their fees. Total return, 111%. So with 111% total return on your investment in less than a year, would that be good enough for you? And mind you, this is all automated. This is completely automated. You don't have to lift a finger. You don't have to tinker with this. You turn it on and watch. There's nothing to do except watch. Might get a little bored. This account is averaging 6.8% monthly with a peak drawdown of 0.01%. Definition of a drawdown is the amount of your account balance in a losing trade. It's called a drawdown. It's winning 64.8% of the time, and it has a profit factor of 2.88, which is a beautiful profit factor. What this is telling us, for every $1 lost in a drawdown, the system will gain you $2.88 in profit. It's averaging 4.6 trades per day over the last 342 days. It's averaging, let's see, the average trade length is 2.9 days. Average result, $10.90. Average win, $25.82. Average loss, $16.50. But when your average win is $25.82 and you're winning your trades 64.8% of the time, and your peak drawdown is only 0.01%, that's how you get 111.4% total return on your investment in 342 days. That's how that happens. So yeah, we're trading 10 different strategies here. And if we look at the monthly return table on it, so you got a 10.1, 3.2, 2.3, 5.2, 8.8, 4.5, 7.3, 8.5, 12.6, 7.7, 6.8, and sitting at a 2.6 here on June 15th. It's June 15th today, 2026. So that's it for this case study. Again, if you look in the description, I'm going to put this link in here, this FX Blue in there, so you can take a closer look. See where it's at. I don't know when you're watching this video. I'm going to throw it up on my YouTube channel. So hey, it might be a month, might be 6 months, might be a year or two down the road to look at the gains since then. Check it out and schedule a demo with me. I'd be more than happy to give you a peek on the inside. So that's it for today's video. And stay tuned because there's going to be more case studies coming real soon.